This is your September economic update through Avance Latino or Avance News. My name is Josh.
My name is Carlos. Welcome back, everyone.
We're here to give you guys an update on what's been going on the month of September, but most importantly, the month of August and the previous months. Recently, we saw that the data, the information on the economy, how we're doing, with inflation, actually came lower than expected. It's at 2.5%, the consumer price index, or the CPI, which is important to know that whenever it goes up or down, this will determine not only how our economy is doing, but also if they're going to lower interest rates or increase interest rates on everything, on houses, on cars, on your savings accounts, on everything. So definitely it's important to know this number because it definitely will affect everything, everyday lives, expenses, everything,
Even
borrowing
employment.
money, employment, unemployment. Because the most important thing is right now we're in a very high interest territory where the longer we stay with higher interest rates, the more likely chance that unemployment's going to keep going up. And it has been going up. It went down a little, the unemployment rate, but it's still higher than it was last year for sure.
Yeah. And what's really interesting is all this talk that we're having about what's going on in the market and everything still has ripple effects from what happened in COVID and all the printing of money. That's why a lot of people say, oh, we're in a recession. Not in a recession. That's why the numbers and graphs are kind of all over the place. But yeah, anywhere that you watch news, at least every week you hear either people being let go or companies having to declare bankruptcy. So this high interest rate, that's what it does. It helps slow down the inflation. That was, I think we hit 9% at one point, right?
9.1% was at peak.
Yeah, so it was getting really bad, and that's one way that the Fed, as you watched our videos, is that's the only tool that they have to be able to fight inflation, is to be able to stop it. Housing was going crazy high, your groceries were going really high. But now the negative side of keeping interest rates really high is your job could get affected, because if your business, the company that you work for, isn't making money, well, they're going to have to letting go all those employees that they hired.
And there's a lot of factors of why inflation went up. A lot of money was printed. But I remember seeing just an article not too long ago about California and insurance, and how car insurance specifically is on track to increase by 54% in some places of California for various reasons. Inflation, so the cost of a brand new car, the cost of parts, the cost of everything has gone up. Secondly, car thefts. Car thefts have gone up a lot in California in the last couple of years.
Wow.
And obviously that impacts the cost of insurance. And for example, that's just car insurance. Home insurance in California is another thing, which is insane. I was talking to an insurance agent that deals with everything: home insurance, business insurance, car insurance, etc. But specifically home insurance. A lot of insurance companies are leaving California, and they don't want to insure people's homes for various reasons. Number one is because the average home here is 50, 60 years old compared to other, states where homes are pretty newer. Vegas, Texas, whatever. They're a lot newer than the ones here. I just bought a house. 1958 is when it was built. You know how many insurance companies wanted to insure me when I submitted before obviously closing on the house? How many? How many do you guess?
Two.
Two insurance companies. That's it. There's hundreds. There's hundreds of insurance companies, but only two.
Wow.
And my insurance agent told me it's because, look, there's another one that out of the two, one of them wanted to charge me something like $6,000 or $7,000 a year, which is insane for home insurance. Usually it's like $1,200, $1,300, $1,500. They wanted to charge me $6,000 a year, which is like $500, $600 a month. They do that so that they can say that they're still serving insurance policies in California. It's just a way for them to not take on new business. So I'm not going to say the name of the insurance company, but it's just a way for them to say, hey, we're still providing insurance, but make it super expensive so they don't take on new clients.
So what do people do then? They just have to pay the high premium?
Well, I went with the other one, which was what is it called? Mercury Insurance. They were $1,300 a year, so pretty cheap. Also, because my age, a lot of insurance companies didn't want to take me on. I didn't know age affected,
Yeah, you're a
home
high
ins-
risk. You're a party animal.
yeah, yeah, high
You're gonna
risk,
destroy the house.
but it's crazy that there's a lot of insurance companies leaving California. So it's
Hmm.
causing so inflation in parts like, for example, in California, like I just said, up to 54% increase of car insurance. So
Wow, that's a lot, because yeah, cars are already expensive. So then having to find out, that your new monthly payment went 50%. That's a lot. That's a lot.
not because you have tickets, not because you're a bad driver, not because you did something bad, but just because, just because you live in a certain
Well,
state.
I didn't even realize it because you said it's inflation, but also because of crime. So even it doesn't even matter much about inflation. It's just crime so going up in our area that they have to, charge more.
Yeah, yeah, crime is a
Wow.
huge thing. That's one thing people don't realize. Is, I guess, even specific cities and like, different things like that. That's why like maybe living in a house or a place where you can put your car in a garage might lower your, make sure your insurance knows
Mm,
that, compared to having to park it on the streets, and
high risk.
it's more of a risk. Yeah, of course. All those little details, stuff you got to talk to your insurance agent about. But, inflation in August, like we said, it went down. It's been going down every month. 2.9% was July, 2.5%. The CPI index was in August. And I guess if the trend continues, it'll keep going down for the month of September, which hasn't
Yeah,
ended yet. But it's, we're getting closer to election time. Okay. We're getting very
yeah.
close to election time.
Yeah, and remember when we talk about inflation, this is year over year. So we're not returning back to, or else we would have deflation if we were heading back to previous before COVID. So right now, yeah, prices are slowing down, are not going as high as fast, but they're still slightly going up. That's why a lot of people watch the news and they're like, inflation is going down. Congratulations, but you might not feel it in your pocketbook because it's still high technically, because there's another chart here that this guy on Charlie, my favorite guy to follow, he all he does is put stats. So he shows here how inflation, this is a trend. The blue line is a trend that they want to hit that 2% target. And if you see here in 2020, we were below the 2% target. We were actually negative inflation. I think we were below what they actually want. The Fed always wants at least 2%. They say that's a healthy market if it's 2%. And then we shot up, all the printing, all the crazy inflation that happened. So here is where we are now. So if the Fed says, hey, we want to hit the 2% target, technically speaking, year over year, yes, it's improving, but in the long term, we're way far above. And in his chart, it says we're 11% above the inflation trend. So that's where the argument of, is it too soon to cut, or should we hold rates at this high
Yeah.
that they are?
Yeah, definitely. This whole conversation that we're having is all leads to the question of like what's gonna happen on September, as Jerome Powell is potentially gonna cut rates. That's what people think.
I think there's a 75% chance.
Yeah,
Yeah,
that's
73% is what the
yeah,
market is expecting in September.
yeah, pretty high chance at the rate. At least one rate cut of 0.25% or something like that.
Yeah.
So
Hey, this whole year since we started, they said they were going to do 6.
yeah,
So remember that. They could do 1 now, but then they just don't want to make that mistake that they cut soon. Everyone gets excited, and then we see a peak in inflation like we did at the beginning of the year. So
yeah,
we really don't know, but it does seem like they are going to cut possibly, even though I'm like, I just don't know why, because we still have a long way to go. And if the economy is still, technically they say it's still holding good, that they say the job market's healthy and all that stuff, then why would they cut? If we know historically speaking, every time they cut is because they have to admit that the economy is slowing, we're in a recession or heading into a recession. And that's the thing. You can look back in data. It always happens. So that's the part that's a little scary, that they're going to cut rates.
yeah, yeah. So we don't know. I mean, he hasn't promised that he will. He's hinted at
Next week,
potentially.
or whenever you're watching it, September
Yeah.
18th
Yeah,
is when.
September 18 is the FOMC meeting. So the day that he decides, if they're gonna cut rates or not. So we'll see.
I think they might, because even my bank SoFi sent me an email that they lowered the interest rate, on my savings. They had a high savings and they dropped it by a little bit, like point something percent, like very small. But so I'm like, maybe banks do
Already
know
know.
something that we don't know.
Yeah, and I guess the market reacts before the
Hmm.
actual thing happens. That's why interest rates on mortgages have gone down.
Yeah.
Even though interest rates from the Federal Reserve haven't gone down, so the 10-year Treasury yield or whatever.
Hmm.
So yeah, so that's always interesting to know all that. So yeah, unemployment's not doing so. The unemployment's not doing so well, and then I feel like every single month there's always like what you're showing here on the payroll, right?
Yeah.
The every single month
Positive months.
there is a adjustment. They adjust the numbers every
Oh, the
single
job
month on
openings.
the job openings and all that stuff.
This last one was really bad. It
Yeah,
was
yeah,
like negative 800 and something thousand
yeah,
jobs that were miscalculated.
yeah. So it's pretty crazy that there's I'm like, how can you get it that bad? I get like, oh, we got it off by 1,000, 10,000, 50,000, 100,000, almost a million combined in the last year or something. So
Yeah.
yeah, there's been a lot of corrections with that. So
Well, the healthy job market is pretty much, if you see here in this chart, is in leisure, hospitality, healthcare, construction's doing pretty healthy, and government. Those are the top four of the markets that are still doing pretty healthy. And in finance, it's still doing good. Professional business is only 8,000 new jobs this past month. Transportation, but if you see everything else below, warehouse, trade, utilities is negative, information is negative, retail is negative, manufacturing is negative, and that is a big sector of the market. So that's why it's kind of like a mismatch depending on where you work. If you work in these jobs, you're probably like, airports are booked, hotels are booked, people are traveling, so you're probably doing really good. If you work for the government, you're probably doing really good. But anything else, and you do see it. Like the other day I went to the mall, and it was in the city of Downey, and every store had a 50% discount. Every store. That's the part that my wife I didn't even notice it. I was just walking and she's like, oh, look, 50%. And then again, we passed and it's like, oh, 50%, 50%. We're like, whoa, what's going on? That every store is posting 50%. That's not a healthy market, in my opinion.
and then a lot of empty, I'm assuming, for
Yeah.
lease, for
Yeah. A
rent.
lot of for lease. But like, we're also in a different world. If I speak for myself, I rarely do shopping online. So it is a dying industry. The
Shopping in
malls,
person.
yeah, shopping in person. I do all my shopping on Amazon or online stores. Every store nowadays has to have an online store, and I'd rather do that than walk around and spend my time,
Yeah.
working versus shopping.
We're remodeling our house right now, and literally everything we bought is
There you go.
online,
Yeah,
Amazon, different places. And I'm sure back then people were like, no, I got to see it in person. What do you mean online? But now
yeah,
it's like, oh yeah, it comes like like today at 5 o'clock, it'll
yeah.
come. Oh yeah, buy it.
And I hope Amazon never gets rid of this, because sometimes I need a shirt. Let's say there's a wedding, I buy like 5 of them, and then the one that fits and looks the best, and I return the rest. So yeah, there's some pros to online shopping.
Yep. So there's a lot of things going on with our economy right now. We'll see what happens with the interest rates, and if they were to drop them, how is the market going to react? Is that going to create more inflation? Because is that going to drive people to be like, all right, let's go refinance this? Because there's a lot of people that bought houses this last year and
Previous year.
and this earlier this year that have like a 7 or 8% interest rate, and right
Mm.
now interest rates are like 6 or below 6. So if it drops to like 5, 5.5, I mean, who wouldn't refinance if their interest rates were at 7 or 8%? They're
Yeah.
going to be saving a lot of money. So is that going to drive prices to go up? And
Yeah.
our cars, because I have a pretty high car interest rate because I bought it like 2 years ago. I'm
Hmm.
gonna eventually want to refinance my wife's car as well.
Hmm.
How many people are gonna do that?
A
So
lot.
a lot of people.
Yeah, so there is a lot of pros to cutting interest rates, and that's why a lot of people want interest rate cuts to happen.
Yeah. So yeah, that's pretty much an update, here on the economy and how it's doing. We don't know what will happen. Usually when they cut rates, it's because a recession
Yeah.
is near or it already started. But we won't know until it happens.
Well, every industry is different. Like in the film world where I work in editing mostly. But whenever we do shoots and we talk to the people that we hire, either lighting, like camera guys, whatever sound, they're always telling us thank you for hiring us, because in LA the film world is pretty much dead. It's very, very, very dry out there. So every market is different.
Yeah, it just depends on the industry, and you can apply it to everything. With real estate, with everything, some cities are going to be booming. Some cities right now are doing terribly. for various reasons outside of just the economy, natural disasters, different things like that, insurances,
The fires.
the
That are
fires that are destroying homes in California. And yeah, there's just so many things that are out of the economy too. There's out. It just happens. Life happens, right? So hopefully this is a good update for you, so you know what's going on with the economy. We'll see you guys in the next episode.